Hey everyone, I'm Jeremy Szafron. This is Kitco News. Well, the latest job report is causing quite a reaction. 254,000 jobs added in September, well above the forecast of 150,000, with unemployment dropping to 4.1%. Now, keep in mind, these often get revised, these numbers, and previous months have seen some significant adjustments, but it does add to a layer of uncertainty as the market tries to gauge the Federal Reserve's next move, with only one rate cut expected by year-end, according to the CME FedWatch tool. Of course, geopolitical tensions in the Middle East, combined with bond yields climbing above 4%, is keeping investors cautious here. This week, all eyes are on the CPI, the Consumer Price Index data, which will be key to understanding where inflation really stands. Joining us today is Ed Butowsky. He's the founder of Chapwood Investments, a wealth management firm who has clients we would all recognize, athletes, celebrities. Of course, he won't talk to me about it. But last time we had Ed joining us, he made a spot-on call about utility stocks. Since then, the sector surged about 30%. Ed, welcome back to Kitco News. Thanks for joining us.
Well, thanks for having me. I appreciate it.
Well, let's talk about this call that you had. Nice work. I mean, you had a 30% run on utilities as a sector last time we had you on. You were talking about kind of why. Remind the audience here. Talk to me about what drove these returns, and is there any particular winners that you enjoyed this run?
Well, I'll tell you, the whole industry has done very well, and a lot of it has to do with the drop in interest rates and the perception of the drop in interest rates, because stocks move usually 6 to 9 months ahead of earnings and economic data. So you had a lot of earnings that or economic data that came out previous to the move in interest rates, and that has turned out to be a really, really good thing for utilities. And I do believe that there's still a lot more upside left because I think we're going to get another rate cut in utilities. And there's also this kind of a hidden gain, and that is that the cost to generate energy on utilities has gone down because coal prices and natural gas prices have dropped considerably. So there's kind of a hidden positive there because it costs less to generate energy for those utilities. So I think you're going to get a big gain in earnings on that as well.
Interesting. Nice little margin there, I guess. Increase on margin. Maybe we start seeing it on the balance sheets. Okay, we're just talking about that strong performance, but should investors hold their positions or should they start taking some profits here? Any specific stocks, Eric?
Yeah, well, I'll tell you, a lot of them have reached the target prices, but I think those target prices are going to be adjusted upward. So if you look at Southern Company or Entergy or even Con Ed, these are all regulated utility companies, and they all have reached their target prices. But I do believe, just as with any stock, target prices gets raised. And I do believe these are going to get raised, and we're going to see a really strong end of the year. I think we're going to see another 15% gain in utilities for the remainder of the year.
Wow, 15%. Okay, is there any risks maybe looming that could change your outlook on utilities we should keep an eye with?
Well, if you have a reversal in the global economy, and I say the global economy, not just the United States, but if you start to see the global economy gain strength, which is very weak right now, and that's why interest rates have been dropping. But if you start to see a reversal in that could, not stand really well for utility stocks. That would be the only thing I could see that would be a negative. You have Duke Energy suffering a little bit from what happened in North Carolina, but that's not, as bad as that is, it's not going to be a major downside move for Duke Energy. So I would say just about every energy company out there is a real positive, including Hawaii Electric. Hawaii Electric is something that I called last time I was on the show, and it's up 15% since then. And I do believe that they're going to have a decision made pretty soon on how much liability Hawaii Electric has based on the Maui fires. And I think that's going to end up being a positive for Hawaii Electric. Last time they talked about it, the stock went up to over $20, but then it rescinded back down to about 10. But I do believe that Hawaii Electric is going to be that sleeper that's going to do very, very well. That symbol is HE.
Yeah. And like you said, I mean, over the past 6 months, 15% gain, still doing well. As we enter the final stretch of 2024 here, we got these geopolitical tensions we're watching closely in the Middle East. We had the Fed kind of expecting 2 rate cuts. That was the talk on the street. Now, of course, the CME FedWatch tool is calling for 1 this year. Where are you seeing the best opportunities for investors now here, Ed?
Well, I'll tell you, I do still believe that value investing and getting dividends off of your stocks is the best way to be. Maybe it's because I'm getting older and my clients are getting older and I always want income. But I also believe that stocks that pay dividends go down less than stocks that don't pay dividends because people are less apt to sell those. So I like AT&T. I like Altria. I like Abbey, which is not a very well-known drug company, but pays a really nice dividend. I like all 3 of those to perform well, along with the utilities.
Yeah, cash is key, as we know. Everyone likes a little cash flow. Should investors look towards maybe growth sectors to take advantage of any upcoming shifts that we're seeing?
Well, I'll tell you, the growth stocks have already done pretty well. The Magnificent Seven are all growth stocks. And I don't know how much more upside they have. Last time I was on, I talked about Tesla, and I was wrong about Tesla, which I have no problem saying. A lot of people have been wrong about Tesla from a valuation standpoint. But Amazon and Meta, these are growth stocks that, Mercado Libre is probably the one growth stock that I really, really like. It's the Amazon of South America and the Caribbean, and that symbol is MELI. I don't see anything getting in the way of Mercado Libre going forward. I think that's going to be a huge winner. So there are some growth stocks that I do like, but I would rather stay towards the value level and play it safer.
Yeah, good call on the Tesla. I mean, everyone gets it a little wrong. I know it's down a little bit today, but investors have been watching closely what Elon Musk is doing. I know there's some sentiment there that he's getting a little too political and that he's not doing enough business on the Tesla side. There's still some upside there, you think?
I do. Tesla has so many different parts to it, and Elon Musk being involved with politics doesn't disrupt the company. I mean, the company has thousands of employees, and the company is not just Elon Musk. So I wouldn't get too, too worried about him having his hand in the political side right now. He's able to, delegate to a lot of people. But Tesla itself as a standalone, I just have always felt as though the competition is so great. And that's why you've seen prices come down on their new models. Because it doesn't take a lot for Ford and General Motors to come up with, along with Acura and all the other Toyota to come up with come up with autos that compete with it very strongly. So I think the competition is going to really hurt Tesla quite a bit, regardless of whatever Elon Musk does or doesn't do.
Yeah, interesting. I mean, you talked about it. It's been, the S&P at least has been on a massive tear this year. Obviously, every single time that there's a little correction, people and investors are jumping back into the market. I mean, with the latest job numbers coming in strong, we saw 254,000 added in September. Forecasts were calling for 150,000. Of course, we know there's often revisions, but how do you think the Fed will respond here, Ed? And how should investors position themselves ahead of another potential rate cut?
Well, if you look at the jobs numbers, a lot of them were government numbers, and the 254,000 came as a surprise. But I don't know how they forecasted to begin with. I have no idea how the economists come up with these forecasts. So 254,000 was a blowout number. I still believe the economy, as measured by the GDP, is weak. And because of that, we're going to see rates come lower. And I was calling for a 50 basis point cut in September for a long time. And I still believe that we're going to see another 50 basis points either combined before the end of the year or in one, in the November number.
Yeah, interesting. Okay, well then, is there a scenario where investors could be caught off guard by more surprises? I mean, it seems like every single time we think we got this right, we don't.
Yeah, well, the CPI number is a lot of that is you really have to take a deep dive on how they get that number. I have a gentleman named John Williams I'm going to have on a podcast that you might want to interview one day with Shadow Statistics. and he does an alternative measure on the CPI. And he uses the old rules of how they used to measure the CPI. And you'll find out that the CPI is closer to about 8-9% still today. So the manipulation of the CPI numbers and the GDP numbers are really, concerning to everybody. It's hard to know what the real numbers are. But any surprises, I think, would come from the GDP, not the inflation numbers. The GDP numbers are going to dictate more of where the interest rate cuts are going to come than the CPI numbers are.
Yeah, of course. And, we got this election coming up, too. And a lot of analysts saying that this is almost an election trade, that the markets are going to keep rolling over and be very heavy until then. How much of that do you think is true here, Ed? I mean, is some momentum in the market prior to November that we should just be trading?
No, I think you have to follow the Fed, not so much the rhetoric out of the politicians. It's really difficult to know which way the markets are going to go. I have said that if Kamala Harris and Walz win, we're going to see a slow deterioration in the stock market. If Trump wins, we're going to see a quick jump and a sustained rally because I think Trump is better for the world economy and the U.S. economy than the Harris-Walz team would be.
So you're not looking forward to those capital gain taxes then, Ed?
Not at all. Or even capital gains or just any taxes and large amounts of what's the word I'm looking for?
Well, debt, I guess, is here as well.
Yeah, all the regulations are definitely inflationary because everybody has to pay money to keep up with the regulations, and that's very inflationary. People forget how inflationary regulations are.
Yeah, well, we're starting to see the effects of it in certain places around the world. I mean, we saw China have a little bit of a come down there economically. You previously on the show were kind of talking about emerging market ETFs as promising investments. Has anything changed here? I mean, we got huge geopolitical and economic data out from the global markets, but is the emerging market still somewhere you're looking at?
Yes, very much so. I got a little soured on China for quite some time, although China's market has done very well recently. But India seems to be the sleeper. And I love an ETF with the symbol INQQ, which is an internet e-commerce ETF that's focused on India. And I believe everybody should have INQQ in their portfolio.
Interesting. India. I've heard about this a little bit. I mean, they are kind of the surprise. There are a lot of hedge funds looking at India saying, okay, we're going to go and invest heavily into that economy as well.
Yeah, you have about 10,000 cell phones are sold a day in India. It's a remarkable number, and the penetration from an internet e-commerce division or area has not even begun. You have 1.6 billion people, and they're still trying to get the e-commerce and internet right there. So there's just an incredible amount of growth potential in India, and their markets are primed to go much higher. So I would be definitely an investor in the e-commerce internet space in India, and I would But South America, as I talked about earlier, Mercado Libre is a fantastic internet play for South America and the Caribbean, and that's kind of an emerging market play. I would absolutely take kind of have a barbell approach and take money and put it in INQQ and put it in MELI.
Okay, that's a good tip. We've seen the price of gold obviously hit record highs this year, and we know that it's kind of a hedge against some of this inflation that we're seeing. Is this still an effective strategy? I mean, you kind of represent the smart money, Ed, where you're kind of wanting to look more long term. How many of your clients are looking at things and hedges like gold and commodities?
Yeah, well, my clients that bring it up, I kind of put it down. I don't like gold as a hedge, and historically, gold has not been a hedge. I don't know how these ads on television get away with saying gold is a hedge against inflation. It's only recently done well as inflation has come down. So it's certainly not a hedge against inflation, because when inflation went up, gold did not go up. So I would prefer to look at diamonds as a precious asset to hedge against inflation.
Interesting. Diamond market. I haven't been hearing a lot from that one just because of this whole man-made diamond market, but still some potential upside there, huh?
Yes, and lab-grown diamonds are very different than diamonds that come out of the ground. So you have to separate them. It's almost like oranges and tangerines. They're very different. Although they look similar, they're very different, and they have different markets to them. So you have to really look at man-made diamonds, which are lab-grown diamonds, in a different world than diamonds that are pulled out of the ground. But diamonds tend to be a very, very good hedge against inflation.
Interesting. Okay, well, given the uncertainty that we're obviously facing, do you expect any surprises from the Fed as we wrap up 2024? I know you just said that you're still expecting 50 basis points. If that happens and the market's only priced in 25, how should investors prepare prior to that unexpected policy?
They should follow my lead and buy senior rate floating notes, business development companies, REITs, and absolutely get overweighted in utilities. There is a utility fund that has 3 times leverage, and I don't recommend this for everybody, but for those who have a little bit more risk appetite, it's UTSL, and it's 3 times the utility index, and it's up about 45% this year, maybe 50%. And that's something that I really like for to take a little bit. If you're going to allocate 20% of your portfolio to utilities, put 5% in UTSL.
UTSL. All right. Well, you were right last time, Ed. We'll continue to have you on, and hopefully that continues on here at the quarter 4. Ed Butowsky from Chapwood Investments joining us today. Thanks for this, my friend. As always, appreciate it.
Thank you.
Thank you. I'm Jeremy Szafron for all of us here at Kitco News. Thank you for watching. As I mentioned off the top, we got lots of economic data coming this week. Great guests, great content. Stay tuned. We'll see you next time.